Welcome, you're watching Kaleidoscope Sri Lanka Life News Capsule. Sri Lanka is well into its post-pandemic economic phase, and there is little argument that international trade and investment is vital in keeping our economy afloat. But how have we been faring? Anushka Wijesinha, economist and co-founder of the Center for a Smart Future, popped into the studio for a chat. So Anushka, you've opined that one of the reasons for Sri Lanka's current crisis is because of the country's poor performance on international trade and investment. What is your rationale?
A big part of the current crisis is that we don't have sufficient foreign reserves. We're not earning enough dollars to have paid off our debts, to import what we need to import, have a cushion during times of balance of payments crisis. And that challenge has been there for a while because we've simply not been earning enough from our exports and not been getting enough foreign direct investment. And this is an issue that I think we have ignored a little bit in this current crisis. We've been focusing on what has happened over the last 2 to 3 years, but actually this issue of not generating enough export earnings and becoming a more inward-looking economy, less export-oriented, more inward-looking, more domestic market-oriented, has been an issue for a while. And one interesting metric is our debt service to exports ratio. Our debt service to exports ratio in the 1990s used to be around 15%, and now that has gone up to 30-40%.
So how do you think Sri Lanka navigated the pandemic and post-pandemic trade and investment milieu?
So Sri Lanka took steps that most other countries also did at the start of the pandemic, which was to take certain import restrictive measures in order to preserve foreign currency because the generators of foreign currency were collapsing: exports, remittances, tourism. So it wasn't unusual, some of the balance of payments measures that we took. But the difference was other countries began to reverse those when the pandemic began to abate, and they instituted mechanisms that made sure those protectionist measures don't get institutionalized and embedded. Sri Lanka made those measures de facto industrial policy. They became part of the policy toolkit. We didn't revisit those, and now we have become an extremely protectionist economy.
Looking at evolving trade trends, where do you think our growth sectors lie in the short to medium term?
Definitely some of the existing sectors that we are in, whether it's in processed food and beverage, in spices, particularly spice extracts, flavors, essences, in the IT BPM sector, and of course in apparels and tire. All of these sectors continue to hold promise, but each of those are changing quite rapidly. Our markets are changing. For example, in the EU, there's a heightened sense of compliance and sustainability, transparency in value chains, which Sri Lankan exporters need to be mindful of, particularly in food, beverage, apparel sectors. In IT BPM, we're facing a lot of competition from the region, and a lot of our talent now is migrating. So that's another challenge. But fundamentally, I believe those sectors still hold a lot of promise, and there's a reason why foreign investors who came to Sri Lanka many years ago in these sectors have continued to stay.
You focus on your goals. We will take care of the risks. Sri Lanka Life.